tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
Well, I can speak to that. It wasn't that they were hungry. What are you chat about? What the hell is that? Hold on. Let me find out what this weird thing is. Oh, that's that robot, that creepy ass. Okay. No, what it was is the kitty, the big one, not the little one. She was, I guess, pissed. And so she just started trashing everything. So she got on top of the kitchen thing, the area where she's not supposed to go, and she just started swiping everything off the counter. And luckily, she's pretty smart because she stayed away from glass, but silverware, bowls, anything metal that was going to the floor, all the cat treats, even the ones she doesn't like, which doesn't make any sense. She doesn't like them, but she swiped those onto the floor. And the little one was just staring, just like, I'm not getting involved in this. I haven't been here a week. I'm not trying to take on that kind of heat. I don't need that kind of heat. Anyway, yep. So it wasn't a food thing because I always give them, my cats eat. And I'm not like these people that are like, you can eat at 3, 9, and 5 p.m. and all that kind of bull crap. Cats eat whenever they're hungry. So I just have food for them all the time. And that's why I don't have fat cats. You know why you have fat cats? Like cats with diabetes and stuff. It's when you don't feed, and also feeding them grain. Don't feed animals that hunt for a living grain. You ever see a cat out in the wild making some dough, getting ready to put some bread in the oven? Come on, man. Don't feed cats grain. These things are killers. You know, cats, you know what the biggest threat to humanity was saber-toothed tigers. Yeah, I said it. Anyway. Yep, that's it. I didn't have any rants in me, so I guess we did a cat food rant. Kind of. Anyway. Yep. Hello. All right, so we'll get into your questions. And then once we get past your questions, we're going to talk about taking responsibility for your trades. There's a lot of people. Yesterday we did a long show. For those of you that are not digital investors, sorry for your luck. Good luck out there. Have fun being poor. But for everyone else, it was a long show. You guys remember it was like 85 minutes, something like that. But we did most of it behind the wall. And when we went back through the list of, you know, the quality assets and what our thoughts are on them this moment, we got a lot of people hitting us up like, should I sell this? Should I sell that? It's like, no. You shouldn't do anything because of some content that you watched. What you should do is just see if that makes you ask more questions or challenges your kind of belief in those assets. You don't do something because someone else did it. Like these douchebag gurus on Twitter and stuff. They Listen, everybody that sold because Jim Cramer's dumbass said number go down lost a lot, right? At 39.7, get a number go down. That's it. And it went straight back up. So like, don't do anything because someone else did something, or even because someone else thinks something. Everybody's position is a little bit different. So today's kind of discussion is going to be about taking responsibility for one's investments and all that looks like. Yeah. Detroit, man, you guys were almost something till Sunday hit. Anyway, could have been a contender. That would have been great though if you guys had done it at the college level and in the Super. Although they would have gotten, I mean, let's face it, Chris, they would have gotten exposed. They gave up the most passing yards in the NFL. What in the hell kind of chance are you going to have in the postseason? Really, just a slugger's chance is what they call it in boxing. Anyway, and they got exposed by a rookie ass quarterback. That dude is like the San Francisco. Listen, real quick. The quarterback for San Francisco, that dude is nothing. He's nothing. He was the last pick. He was the number 256th or something pick in the draft. He's nothing. There's a good team wrapped around him, but he is nothing. So, just saying. That's why I don't gamble on sports. Don't gamble on sports, man. Those bookies are good. Okay, let's see. Hello. Yeah, I have lots of videos that I try, especially when the cats are growing. I like to see, and I'm not like one of those people that does videos and never looks at them. I go back and look at my videos. I'm like, I'm going to go back. If I took the time to make the video, I should go back and take the time to look at it. Most people just film stuff and they figure, I filmed it, therefore I have it. Therefore it's like, no, it's not. The phone is not your mind. You haven't like stockpiled all these images and thoughts. So most people squander their moments that they have and they sit there looking through a viewfinder on their phone. And some of those people dumbassly walk off cliffs and stuff, like trying to get the perfect selfie. Come on, man. Who's a selfie for anyway? I don't want to see pictures of me. That's so stupid. Pictures of me, taking a picture of me. That doesn't make sense. Take a picture of the thing, like the waterfall or whatever you're looking at, and look at the edge of the cliff. Let's see. Hello. Yeah, but the little one, it's curious. I'll see. He's eating a lot. He's eating 2 of those hockey pucks of raw chicken a day. Those hockey pucks are like, I think over a pound and a half, almost 2 pounds. So he's eating 3 to 4 pounds of raw chicken a day, and he's 12 weeks old. I can only imagine I guess I'll just have to get him like those chickens, those pre-cooked where you haven't cooked them yet, chickens. Just give him a chicken or something. I don't know. I'm not going to give him anything alive. That's ghastly. I'm not that kind. And this is cool because it's pre-prepared raw chicken. It's got the bone and cartilage and all that crunched up in it, but it's uncooked. You can't cook. Don't give cats or any animals cooked or heated food, because when you do that, it changes the way the bones, if there's bones in it, the way that they splinter and break, and they can hurt themselves. In nature, they're pretty efficient killing machines, but when you start messing with the microwaves and ovens and stuff, things that aren't there, you skew things in favor of bad luck. Let's see. All right. Hello. I'm just going through all these seeing if there's any questions. I'm just looking for question marks. Macro effects of the market. I need more, Joseph. Macro effect of the market. Which market? It wasn't much. I mean, if you're talking about I don't think anybody thought the Fed was going to pause. I mean, not pause. They've already paused. Was going to cut yesterday. And the Fed is data dependent, and the data is many, many months old. And listen, if the Fed is cutting rates, that's not a good thing. Like, everybody's like, yeah, they're going to cut. Cutting means that the dumbest people on earth are admitting they see a recession. You think that's a good thing? That's not a good thing. when they start restricting, man. But yeah, the macro effects were a little bit. Bitcoin sold off, I guess, a little bit, but it wasn't immediate. It was kind of a little bit after. But even right now, like as I look, things are not so. I'll take a quick look. Bink, 42.5. So it was down what? 800, 700, 600, 700 bucks. Bitcoin terms, that's not much. That's not much. Yeah. Oh, did you guys see real quick on the exchange? When you guys go over here, you notice how they've cleaned up the order books. We were talking, I think they were, Brandon was talking about it yesterday, but this is a little bit cleaner now. There's no gap in between here. So you can see the highest purchase offer and the lowest sell offer, right? So selling, and then you can kind of, if you hover over it, it'll tell you exactly what it's doing. You're buying hypercycle for USDC, right? So if you come here, I'm buying this with USDC. Here, I'm selling hypercycle for USDC. We're really trying to dummy proof everything. And then here you have stats. And so just so you know, these are volume. So more tokens, less tokens, right? And then you have the specific details if you hover on the thing. But anyway, we're cleaning this up. There's other things we're cleaning up. That's the whole point. We clean, doing some house cleaning. Sometimes it's actually actual trade-based house cleaning. Okay. I have Spectrum, which garbage. Anyway, all right. EFF trades. I want some real alpha. There's all right. Don't alpha me, Howard. Let's see. No, I don't care. I mean, the thing is, like when you see people say alpha, you know that they're idiots. They're either idiots or they're followers. That's like, remember that little phrase people were using for like 10 seconds? It was like, everybody's saying, let's go, because it came from some anime cartoon or something. And everybody's like, let's go. And that was like a thing. And everybody sounded stupid for like 6 months. And you would hear it at the gym. You would hear it, let's go. Let's go where? You're standing in place, grandma. You have 10-pound dumbbells. Shut up. Let's go. Let's go. You're not going. Shut up. So but what happens is people need to fit in so bad. They need to fit in so bad that they will latch onto any cool, near-term, dumb, trendy word because they think that other people would then think that they're in the know. When you say alpha, there's actually a bunch of like kind of macro terms that are used errantly. And when you hear them, you just go, oh. And most people, like, that's the thing. Like, if you say certain things, people with real money, they'll check out. I don't care what meeting you're in with who it is. If they're established and they hear you say terms like that, they'll just check out. You no longer exist. You're a piece of wallpaper. You think, oh, that's dramatic. No, it's not. That's how it is. You can lose $100 million deal by saying some stupid shit like that in a meeting, even if it's offhanded. And even if you're flippant and you're joking, doesn't matter. Done. They're like, I'm not working with these people because they're idiots. And like Brandon had a meeting with some people yesterday that were trying to crypto-splain him some stuff. And he's like, you guys don't even know what you're talking about. I don't think he said that. I hope he didn't say that. But he instantly checked out. Any deal we could have ever done with those guys is over. Over. Can't happen ever. Done. Because when you see that, when you see people that are loose, sloppy, imprecise, weak with the way that they communicate, then that's the way they are with everything they do. Another thing, you go to someone's office. If people have offices anymore, look at their desk. If it's a cluttered mess, don't do business with them. Oh, I have a system. Your system is cluttered shit. That's what your system is. Cluttered environment is a cluttered mind. Go look at someone's garage. That'll tell you all you need to know about what's going on behind the scenes. I'm telling you, people like, that's overly dramatic. No, it's not. It's a heuristic model that keeps me from dealing with idiots. Because remember, at a distance, people don't say, look at that really smart guy arguing with that idiot. They just say, look at those two idiots. Okay, Timothy, Can you please explain the earning structure of a hypercycle node that has tokens when it's loaned out to HyperPG? If it's loaned to HyperPG, the structure is they're going to pay you a fixed percent return. And that would probably be in hypercycle tokens is my guess, or converted to USDC. I'd probably rather, I don't know what I'd rather have. I guess I'd rather have the commodity. Well, it depends, right? Because then you got to convert it. But I guess well, maybe, I don't know. But anyway, HyperPG is going to say, here's a 9%, 10% return on your funds for 24 months. And it's a locked return. With Hyperpools, and again, that might still be run out of HyperPG. I don't know what the final iteration of that is. I don't know what it looks like, but I know they're working on that right now. Like, it's a few days away. The Hypershare, just so you guys know, Hypershare token, done. 1155, done. The RNS tokens, done. The token stacks, done. All of it's done. It's just messy. And the reason it's messy is not because it's technically messy. It's messy to regular people because there's a lot of steps. There's a lot of steps and it's not super intuitive. In the same way that, like AI science is probably not at first intuitive. It takes a little time to get used to it. So they have all these things. They're building at HyperPG, and the Hypercycle team is building a process where you'll be able to take your tokens, take your licenses, put them together into that stack of assets. It'll spit out the 1155 and it'll spit out your C Hypercycle tokens, which is the native asset. It'll spit out all the things you need to run your little data center, your node license, which is kind of like a little data center at either your own hardware or someone else's hardware. Okay. Whether that's HyperPG or in the Hyperpool structure or loaned out to some other entity, which there could be plenty. So, we're building a different one, which we think's a little easier to use at Node Market for token holders, for people that own the Node Market NFT, because we've got to give them some cute little benefits. It doesn't mean if you don't have a Node NFT, doesn't mean you can't participate. Obviously, you can go and they're going to have everything beautiful set up for you through Hypercycle. We're just doing a little bit more beautifulier version. That's all. Now, the HyperPG model of take your tokens nodes, take that whole stack of assets, send it to them, will pay you a fixed percentage return. The Hyperpools model is a percentage of the income. So if they make $100, they're going to split that up based on whatever percentage, and you're going to get it. And if month 2 they make $200, you're going to get your same percentage. If they make $1 million, if they make $4, whatever it is, you're going to share in the revenue. Does that make sense? So it's revenue share versus fixed percentage return. You can kind of think it's kind of like a debt instrument. The HyperPG is kind of like it's kind of like repo, right? You're giving them collateral and they're paying you a return on it, and then at the end they give you your collateral back. It's a 24-month repo. A collateral backed repo, not some empty-handed bullshit like you see in real repo. Okay. Yesterday you said HyperPG might pay about 10%. Is that on top of the approximately 30% a full node would earn? Or no, it would be, they're just going to pay you a fixed percent. Whatever that is, it's a fixed percent. They'll tell you, you're not going to have to guess what it is. And it's not going to be fluctuating, Timothy. It's going to be, you gave us this, we're paying you this every 2 weeks for 24 months, period, full stop. That's it. That's what you get. And they're keeping all the earnings. Okay. They're paying you a fixed percent. This is, again, it's a repo transaction. They're borrowing your collateral. They're going to use it and they're going to pay you X for it. Whether they make $1 trillion or no dollars, they're going to pay you a fixed return on that. Does that make sense? That's how HyperPG works. Now, Hyperpools, you may access it through the HyperPG website, but HyperPG is the partnership between Penguin and Hypercycle. And it's a subsidiary. It's not, listen, HyperPG is not Hypercycle. It's a separate entity. Hypercycle, the company, owns part of it. It's a partially owned subsidiary, and they vest and all this kind of stuff. But HyperPG is its own entity. It's a separate company. All right. And there's going to be a lot of those, by the way. There's going to be a lot of companies that probably come into the mix and say, hey, we got compute resources. We'd love to have people send us their node licenses and tokens. Let's rock and roll. So you're going to see a lot of that. Bam. Hello, Howard. All right. Can you comment on the news that FET, F-E-T, is insolvent? I don't think they're insolvent. I haven't heard anything like that. I mean, we could give it a Google. Here. Is fetch.ai insolvent? This is where it starts. Fetch claims business as usual amidst opposing reports of insolvency. Here's why Bitcoin Perpetual says is the Bitcoin power law model more realistic? Well, that's a lot going on. Let's see. Let's find something better than the let's see, Evening Standard. These are all UK. Let's see. Fetch put in administration after search to find urgent rescue. This looks a little bit more realistic. Let's look. Okay, the Standard. I don't know anything about Standard. It could be written by some half-wits. I don't know, but this is where I would start. Fetch.ai puts in administration and search to find urgent rescue capital for crypto and AI firm. Let's see. Do they need a rescue? Tech firm Fetch has been put into administration and sold back to a consortium of its founders. Interesting. I wonder how they worked that. Advisors to the Suffolk-based business, which is firm behind the Fetch AI crypto token, said it ran into financial difficulties towards the end of 2023 and appointed administrators in order to find urgent rescue capital or secure a sale of the shares. Business. Okay, so they're going to sell their assets, looks like, to cover some debt. Again, I wouldn't take this as I would go read as many of these articles as you can. Fetch market cap more than $500 million and around 50 million day in trading volume. According to Core Market Cap, it was launched by the founders of the business in 2017. Powers of internal economy with Fetch.ai users spending FET to consume services within the platform. In its most recent accounts, Fetch posted a net loss of $16.7 million and wrote down the value of its assets by $231 million following a plunge in the value of Fetch between 2021 and 22. What's stupid is, did they think that 2021 was normal behavior? That everybody sitting at home, not going to work because COVID shut the whole fucking planet down? I don't understand. I don't get it how other people don't get it. Like, if everybody stops working, and you still have GDP, which means it's government spending, money creation out of nowhere. Do you think that's real or fake? So when a lot of home builders got into this, they're so stupid, these guys. They don't know anything about finance and like zero about economics. So like, hey, it is what it is. These guys were like 2021. They're like, we're going to be building the biggest houses, charging for like 2020 and 2021 wasn't forever. It was a Band-Aid fix to the global pandemic. God, anyway, so there was a lot of bad behavior. There's a lot of zombie companies that need to get blown up. Anyway, it's understood the token is not owned by the company and will not directly be impacted. According to an official insolvency filing published today, Fetch appointed administrators from Resolve last week. It was subsequently been purchased by a consortium of the firm's founders. Oh yeah, of course. Because these assholes got super rich. So these guys are good. They probably raised money and bought their company back with pennies on the dollar. Oh, well played, you bastards. Symbol.ai, according to Resolve, who said the founders put forward the best offer. After a wide marketing campaign, we're pleased to have achieved a sale of the business and assets of Fetch AI, which is in the best interest of Grant. Okay, so we know what we know. In a statement posted online, Fetch said the move was part of a restructure aimed at shifting operations to Dubai. Man, everybody's going to Dubai. There's a lot going on in Dubai. Singularity DAO, I think, is in Dubai. I think most of the Sophiaverse team is in Dubai. Supposed to be some new things coming from Singularity DAO, although I haven't seen it. I think they just can't get tech out the door. They're like, it's very complicated. No, it's not, man. You communicate with people and you tell them what you're working on. You communicate with your engineers. You tell them what you're working on. You get your fucking software built. Everything else is an excuse. You take 6 weeks off in December, 17 weeks off in January, and 24 weeks off in November. There's no fucking time left in the year to build your software. So enough excuses. These companies need to quit with this bullshit. They need to start putting software out. This is, man, the whole unwind. So, okay, to reduce it back to this, doesn't look like anything other than the founders found a way to buy their stuff back at a clip. What does that say for the token? Has the token taken a bath? Probably not. Probably don't even care. Look at that. That's down a little bit. 6%. I don't know if that's that much. If any other company had that kind of news, they'd be trading at dust. I guess it's one of the worst performers on the day. 6. That's in crypto. That's nothing. 7. Let's call it 7%. But that's the 24-hour. That means that the week's gain down 5.5. It's still, if on the 7-day it's only down 5 and it's down today 6.8. Therefore, that's not that bad performance. It's not a great over the month. It's not a tough. Everybody's had kind of a tough month. Looks like, except for Hypercycle's fine, but everybody else has got their. Well, no, Sia coin. Sia. Yeah, everybody looks like they're getting their butts kicked on the 1 week. I mean on the 1 month. So what? Anyway, so that's it. I would go from there, Chris, and I would just kind of read articles and just see what it means. It wouldn't shake me out of the asset. Matter of fact, the founders bought part of their shares back. Remember, these are two different things in play. There's the equity in the company. These things always have foundations. It probably, I'll tell you what, though, it probably makes it harder for them to argue with big companies that they need to get in bed with them and do deals. That probably becomes more difficult when the companies are like, yeah, but are you insolvent? They're like, no, we bought all our shares back. Like, yeah, but how did you guys burn that much money? And it's probably something like, we had a bunch of people employed. We work in AI. We had to obsolete those people. And our burn rate was really, really high. That's the thing. You look at these companies like, we have 5,000 employees. What do you think their burn rate is? What do you think the burn rate is at Ripple? 400 something employees. Doing what? They haven't sold one piece of software. Nobody's using it. Not nobody, but like mostly nobody, if we're being honest. No one's doing remittances with XRP, not on some grand scale. Nobody. There's a lot of people testing, but no one's doing. That's kind of the problem in crypto. Now, there's a lot of doing kind of on the peripherals, meaning you could say Bitcoin's doing. There's a lot of people doing. I mean, there's a lot of doing in Bitcoin. If you think Bitcoin is sole purpose is a store of value, which is a perversion of the original white paper, but let's just say that's the use case. As that use case, there's a lot of doing around the ETF and all these companies hoovering up cash and people being interested. So Bitcoin is doing. Ethereum is doing, even though it's a lot of crappy projects that launch and it's mostly bullshit and it's slow, clunky, expensive, terrible to use, can't probably ever scale. All these things, yes, they're true. But at least Ethereum is doing, and people have pivoted from Ethereum. And like, even JP Morgan Chase is doing over $1 billion a day in repo transactions in settlement. Well, in a variety of repo transactions through their like Onyx network, which I think is just a pivot from Ethereum. But every day, $1 billion a day. So they're doing. No one else is doing, right? Hypercycle will be doing, okay, in about a month. In about 1 month, they will be doing when compute goes live. There's another company that's doing. Then you got to like ask yourself, other than people inside crypto trading back and forth crypto, is anyone doing anything outside that to make the rest of the world better? And those are legitimate questions, and there's not a lot of legitimate answers. So you say, well, Fetch is doing. No, Fetch is not doing shit. They're trying to do stuff by creating all these partnerships and agreements and like, hey, let's do this, let's do that. Yeah, cool. But no one's actually doing. No one's actually doing. That's what another reason why I like the Twin project. Twin protocols, it's an easy sell. You want to build a digital twin? Yeah, that sounds badass. Done. Build it. Awesome. Here, buy some tokens, feed your vault, start training your twin. It makes sense. It's easy. You can sell that to grandma. Grandma like, I'd like to have me a digital twin. I'm like, put your teeth back in. So it makes sense. You could see that affecting the real world. even just to a tiny degree, still does really good. These things that are locked inside universes, inside metaverses, inside vacuums, it's mostly bullshit. And so there's this promise of all this stuff. But, at the end of the day, use utility wide scale adoption. XRP, nope. It had a chance years ago. That ship has sailed. Okay. Cardano. I mean, it sounds good. Great team. Good. I mean, it nails the 5 T's, except it doesn't nail the use, utility, or wide scale adoption. Well, it does utility. Yes, there's a lot of utility. Wide scale adoption? No. Use? Can't tell. Not really. Not when these meme coins end up having more transactions. Cosmos? Nope. 5 T's? Yes. Use, utility, wide scale adoption? No. Algorand? No. Then you start going down the list. Crap. None of these assets, other than Bitcoin and a little bit Ethereum. And again, some of these other projects like I think Hypercycle, but there's a lot. So we made a lot of people kind of unhappy yesterday, which is why we're going to talk about taking responsibility today. And they're like, oh man, I'm not going to make life-changing this, life-changing that. You've already made life-changing this and that just by learning finance. Like most of the people that are investing and asking serious questions, stop calling me back. Most of the people that are learning and asking serious questions right now are already 100x more capable than they were a year ago. Does that make sense? Like you're functional. You're functional in an environment that you were not functional in. And I would put most of anybody that's been here a year, anybody that's been here a year more, I would put you up against any economist, college graduate, douchebag, tie-wearing, tweed-wearing, polished shoot, chloroform, dumbass, turtleneck, sporting Ivy League dipshit. I don't care where you came from, what college you're from. You don't know shit about finance. You got to get out in the real world and get your ass kicked a little bit. So those of you that have been here a year, you've gotten like 20 years of real world volatility experience. You have a cast iron stomach. You're like a capable human in markets, but you still have to take responsibility. There's no get rich quick button, right? There is the potential in the crypto space to make a lot of currency units, but nothing's guaranteed because nothing in the past directly affects the future other than the perception of the future and the way people trade around that in the beauty pageant, right? So you just got to be careful that you don't start, this doesn't become like hopium, pinning, it doesn't become a belief system. Investing is not a religion. It is an action, a series of actions that you take, math-based decisions that you make based on very loose assumptions of the psychology of a bunch of mostly dummies, well-intentioned, educated dummies. It is what it is. You got to be honest about it. So, yeah. When you have your tokens staked, how do they benefit from the bull run? Well, the tokens are still appreciating in value, Sherry. They don't stop appreciating. If you put Ethereum, if you staked Ethereum at $2,000 and now it's 2,300, you can unstake and you still have the appreciation of the asset, but you have more tokens. You just have more than you started with. So that's how staking works. Jesus Christ, this person just keeps calling over and over. Stop. I'm sure it's important, but it doesn't matter. Start raising chickens in your back. That's true. I'm not going to do that, though. I'm not mean-spirited. I don't want to see real animals get bludgeoned. Yeah, I have no Reddit finance just doesn't look interesting. When you see crazy ads and stuff like that, I go the other direction. That's meant to entice bullshitty people, people with a very low metrics for data. Like, oh my God, it's blingy and shit. I'm going to invest the hell out of it because it's so blingy. Because I'm going to get it. Okay. Yeah, chicken bones are good for the cats. Ooh. Yeah, fried chicken is not good. And people think like they'll leave bones out for their animals. Do not do that. You can't. Ugh. Yeah. Evergrande in trouble to hit crypto? Nah. But I mean, less money is less money. But I don't think the Evergrande crowd or the crowd that we're like battling with for crypto fortunes. And also, if there was a wide panic, you might see a lot of people go into the Bitcoin ETF and hide. And if you saw people start hiding in the Bitcoin ETF, what does that do for the rest of the crypto space? It elevates the rest of the crypto space. So it's kind of like, you know, the crypto space might indirectly become like your risk off. Wouldn't that be weird? The riskiest place becomes some second derivative risk off trade. That's reading tea leaves of tea leaves of tea leaves. I know. And dummies are not that smart. Like you can use game theory for your own decisions, but you got to realize that there's a lot of stupid behavior. And so you can only take it so far, but it's still the best way to make decisions. Elon's promoting his new crypto club with his patented AI trading software. I don't think that's Elon. I think that's a scam, dude. I don't think Elon's doing any kind of trading anything. Let's see. And no, Howard didn't get a rant. That had nothing to do with Howard. That had to just do with stupidity. You don't want to take credit for inciting stupidity. What up, BZ? Okay, we'll get to this stuff quick. Let's see. Mario asks, Nick, I think why some people got, including myself, a little thrown off yesterday was from the beginning. We were hoping that we had hidden gems that could be more than a 10x. Yeah, but think about what you're saying. Think about that for a second. I think this investment, if you think something might be a 10x, but there's no universe where you should expect that. Like, not at all. Just there's no universe where you should expect 1,000. I had someone call me who works for a trading firm. He goes, hey, what can I get into? I'm just looking to get like to 10x my money. I go to Vegas, you fucking clown. Like, that doesn't even make sense. Listen to what you're saying. You manage other people's money and you're asking me to just casually tell you some stuff that'll get you 1,000% return. Tell you what, go become like either an arms broker or like a cartel member. Short of that, like, get real. Like, seriously, get fucking real. Like, wake up. And I think this is a problem where people convert a small percentage chance of a thing happening, because it's all just a small percentage chance, all of it. And then in their mind, they just convert it to like, oh, there's money. I've made that. You haven't made it till you booked a profit. And a lot of people here will be paper rich and they won't book profits because they'll have this plan of taking profit and they won't do it. They'll wait and wait. Oh, I'm going to wait for this next. I'm going to wait for this. And that greed will make them miss this bull market. They're just going to miss it. That's it. I missed it. Why? I held on. I know people, we were screaming at people. Fetch, AGIX, Noonet, take your 10X, take your 10. No, I'm going to wait for this. Don't wait for shit. Take your money off the table. So anyway, so I guess, Mario, the greater thing, and this is why, again, why we're doing today. Nobody here should expect anything. Even in your sentence, you say beginning, we were hoping. Yeah, hope. Hope is awesome. But hope doesn't win a football game. Hope doesn't win. Listen, hope is a tool to control people, right? You have to say, yeah, I hope these things happen. But you take a percentage chance in your portfolio based on the perceived amount of risk tolerance you have. In order for you to get mad, it means you've overinvested. Think about that for a second. Everybody here, anybody here who gets at all, any degree, even 1 goddamn % frustrated when the prices go down, you are overinvested. Fucking sell. Period. You're not emotionally capable of holding that position. And the proof is in your own behavior. If you have an emotional response to your investments, you're over fucking invested. That is the most obvious, like, resonating signal to you. I don't give a shit what the prices do. I do not care. I'm just looking and trying to make good statistical bets. for that. Well, now it's not 18 months out because now I think we're about to kind of go into a bull run. But they're just statistical bets, beauty pageant bets. Does that make sense? So if you guys find yourself getting angry, you're looking at your portfolio, oh man, or you're angry or you're unhappy because I don't think so, or Brandon doesn't think something. It doesn't matter what we think. You have to take ownership of this stuff. It matters what you think. Okay. Would a 9 or 10% be on top? Dear God, man, Jason, buddy, I've explained this about 43 times. If you're talking about, wait a minute, I'm not sure what you're talking about, but I'm guessing because you say license, let's assume it's hypercycle. Remember, give me enough information in the question that I can answer it. I'm assuming you mean hypercycle. I'm assuming you mean hyper PG. If you get a locked percentage, it is a locked percentage based on what you give them. Locked percentage. Locked. If they're going to pay you in hypercycle tokens, they'll pay you in hypercycle tokens, X amount every 2 weeks, period. There's no on top of this, on top of that, nothing. Locked. It's locked. Locked is locked. All right. It's like a bond. It pays a fixed coupon. That's it. Okay. Yeah, the fact that Fetch hasn't collapsed on that news is probably good. Yeah, Fetch, the partnership with SingularityNet. I don't, listen, I love everybody at SingularityNet. I don't know that there's a lot of business people at SingularityNet. Does that make sense? So the team, amazing. The science, amazing. The brain power, amazing. Right? Amazing stuff, but that doesn't equal profit. The marketplace right now is a non-factor. It does not, no one, nothing, zero. People aren't using the AGIX token, and we're seeing that. Now, there's a lot of ways they could do it. Rejuve token doesn't need to exist. Supplant it with AGIX. Singularity DAO token doesn't need to exist. Supplant it with AGIX. NewNet token doesn't need to exist. Supplant it with you know what tokens need to exist? AGIX. You could argue Twin because of the whole vaulting system. Hypercycle. That's it. That's it. The rest of that ecosystem is taped on tokens. I get it. They wanted to fundraise for the companies and da-da-da. I understand. That's fine. The whole other crypto space is full of shit like that. But in this particular case, I think SingularityNet, with all its spin-offs, is less interesting for the token, especially since they're so late on the airdrops, the partnership airdrops, right? So that's been a frustration. So a Fetch SingularityNet partnership, to me, what is that? Some scientists sharing some information. That's great. Probably for humanity, it's great because you have AI companies working together. So in a cerebral sense, in an academic sense, it's a great partnership. In your portfolio sense, it doesn't make a bit of difference. Fetch doesn't give a shit. AGIX token doesn't give a shit. It still trades about 2 to 1. No one cares. Reverse Tika. That's funny. That's what we should come on. We should make that mean like it's a reverse Tika. So yeah, I'm not selling any of this stuff. Again, I'm not selling anything going into a bull run. I'm just adjusting the ways I'm adding new assets. That's all. You got to be careful with Tika. Remember, Tika gets hired to promote stuff. He doesn't own anything. So what if someone good hires him? Now you'd think, well, no one good would hire him because he's a dumpster salesman. But you never know. But mostly Tika's an idiot. Yeah, mostly he's an idiot. Kramer is a well-intentioned idiot. Tika is not a well-intentioned idiot. And I've heard from some people that have worked with him that he is a dick to work with. Like an absolute not good dude. So that makes me like less inclined to give him kudos. Stick to stuff you don't know. Oh, we found it. We found a fan here. We found a 49ers quarterback fan. Okay. When you can make an argument that Purdy's a good quarterback, when you can make an argument that he's a good quarterback, we can talk. Listen, Detroit should have won. Chris, where's Chris? Detroit, that was the biggest collapse in the history of history. And talk about just ridiculous, the bounce off the pads, catch, and all that stupid shit. There's no way you play that game 1,000 times, the 49ers win 1. And the other 999 times, Detroit stomps them. And that's not great because they still give up the most passing yards. Anyway, I mean, I don't know, Frank. It's just math, man. All right. I thought Fetch was working with Bosch. Yeah, those are all partnerships, but none of those partnerships are actually like doing anything. That's the problem. Everybody has partnerships. Listen, Ripple, tons of partnerships. They don't mean anything. Chainlink, oh, partnerships out the wazoo. Doesn't mean anything. Nice work. Yeah, get on that house money, man. You can only get on house money taking profit. All right. Let me get down and see if there's any other obvious great questions, and then let's get to our Brainiac part of the day. Yeah, that's the key. Maybe that's like the one thing that we should roll into is have a dollar cost strategy in and out. In and out. T or K, that's funny. That's really funny. So yeah, have I taken profit? No. I don't have any. Oh wait, no, not true. I did take profit on. I converted a little bit of render. When was it? It was like a day or two ago. I did. I converted because I'm on house money a bunch of times, but I did a 10x on it, and I'm on my 2x take 10. So I took 10% of my render, which again, it's a very small position, but I took 10% off the table because I think my last purchase, well, we actually did it live. I mean, I didn't do the sale live, but my last purchase was 202, or that was like my last point for my doubling. So at 204.9, meaning basically 410. And at 410, I think I got out at like 413 or 412 or something like that. I took 10% off the table of render and turned it into Ethereum, sent the Ethereum over to Coinbase and staked it over there. And I'm going to probably unstake because you have to there's a cooling off period, a thaw period. I'll probably unstake it leading into May because that's when the ETF decisions come for, which will probably be denials, but everybody seems to think that it's going to happen. The ETF decisions for the spot settled Ethereum ETFs. Again, this is the whole thing between spot and futures tracking and all this kind of cash settled. All right. Okay. Let's see. And listen. Oh, hey, baby. You guys want to see the baby? See if I can get him. Hey, baby. Oh, he's got a soccer ball. Oh, I got you. Oh, come here. He's not letting go of his soccer ball. Oh, he let go of it. Hold on. Oh, no. Come here, Bubba. Come here. Woo. Oh. Yeah, he's. There we go. He's gonna bolt. See, there, and he's gone. That's it. Where's your ball? Here's your ball. Yeah. Anyway, that's all we get. That's as much kitty as kitty will allow. But he eats a lot. Okay. Yes, a guest appearance of Loki. All right, let's get into the goods. We want to talk a little bit today about, we're going to spend the last about 10 minutes talking about taking responsibility. And it's important because, and this is for everyone, you have to take responsibility for your successes and your losses, but you don't have the right to take responsibility until you're honest with yourself. Does that make sense? So we need to kind of discuss that. And so that's what we're going to do now. I even have a cool banner. Take responsibility for your investment decisions. Let's do it.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right, let's go over here. Let's get some cool. Which one do we like? Yeah, it's kind of cool. I like these different musics that you can do. That's good fun. I like the musics. All right. So today's kind of discussion is more about, it's more inward facing than outward facing. But as we have embarked on this journey through this landscape of personal finance, which many of you have been a year, 2 years, 3 years, some of you, like I know a lot of the private clients and stuff, the DPCs, you guys have been involved in finance decades, but this is different. The crypto finance space is different. It requires a deeper look at not only just game theory and cognitive bias, but cognitive bias has a lot of psychological underpinnings. And we're thinking about how other people are thinking. Remember, a fundamental analysis of the value of a thing is not the price of a thing. It just helps us establish what might be the price of a thing. This is important to separate those two things out. You can be right or you can be rich. Sometimes both, but mostly not, because they're not directly correlated. Remember, everybody's financialized the whole world. So essentially, in this personal finance landscape, you have this focus on this pivotal role of taking complete responsibility for your own investments. And that's time investments, financial investments, whatever. Whether they succeed or fail, you got to take responsibility for your F's, for your L's, your losses, as well, as that's where you learn from. You don't learn from winning. Winning, you're like, oh, cool. You learn from a loss. You're like, shit, I don't want to do that again. So this principle, which is rooted deeply in not only like financial acumen and just skills, like underlying skills, but it's also like psychological resilience, quarterback amnesia, right? And this serves as, it's like the cornerstone of wealth building and also just personal development, like in your own life. Does that make sense? So let's look at it through the game theory perspective, the psychological perspective of like cognitive dissonance, cognitive bias, and then the importance of just ownership. In game theory, as we know, every player must assess the payoffs and the strategies, not only of themselves, but of the other players in the game. So when you apply this to financial investments, it's akin to understanding that our decisions are made within a very complex system of markets. A lot of, lines connecting. It's like, the detectives that have the wall at their house where they have all the photos and the red, like yarn and stuff. That's the serial killer thing. Does that make sense? So this is a complex series of markets. Outcomes are influenced both by your actions and the actions of others. So you have to take responsibility in this kind of, in the way this means is you have to acknowledge your role in this kind of game of a strategic game of investing. And you have to understand that there are rules, like concrete rules. There are less concrete rules. There are assumptions, weak and strong, all the way to concrete. And you have to adapt your strategy based on your failures first and your successes second, not the other way around. People are like, oh, I did good at this, so I'll do this. No. You have to take your failures and you have to weight them higher. Right? Like how many snakes falling out of trees that bite you can you get away with before you're dead? Not too many. So let's talk the psychological side. So first you would think cognitive dissonance. Yes. And for those of you that hear this term, it's a psychological phenomenon that occurs when our beliefs do not quite align with our actions, right? It's kind of like blinders, but like when an investment goes awry, it's tempting to externalize the blame. They did it. It's them. It's they. If they hadn't this, that. However, you have to take responsibility. It forces you to align your actions with your beliefs, right? Leading to greater personal. No one held a gun to your head and made you invest in that thing. Okay, great. The owner of the company took off and stole all your shit. Okay, but did you overinvest? Were you too heavy in the position? Did you not do kind of a greater deep dive into how risky is the tech? How risky is the personnel involved? So long story short is you want to take responsibility for your investment actions, take responsibility for the way you did your research, And then you're going to have a lot greater like personal integrity and decision-making quality. The quality of your decisions will be better, right? And if that means you have to take some off the table because you can't let your I want to get rich side overpower your I'm a competent game theory, pragmatic thinker side, right? Don't fall to confirmation bias. And this is the tendency to seek, interpret, and remember information that only confirms your own beliefs. But if you're thinking in terms like, I got to take full responsibility, that means that you challenge this bias, right? You do more research. You open yourself up to a more diverse range of information and perspectives. Even read what the liars and the douchebags are saying. Even 90% lie, 10% truth, right? And even if all you're doing is trying to understand the lie that they're telling, why? What are they trying to motivate? What behavior are they trying to elicit? And then are enough people going to go into it that there's some money to be made there, right? WWDD, what would dummies do? But it's crucial to make informed investment decisions based on the totality of information. And then the key is who weights the information better wins. It's the weighting of information because that's what informs your decisions. Okay. And then it's ownership. Learn from your failures. Take responsibility for your own investments, especially in the face of a loss. And this is like the most powerful learning tool. It compels you to analyze what went wrong, to adjust your strategy, to improve your decision-making process. Maybe there's some parts of your game theory you're not quite clicking on. There's some tools that you don't quite understand in the finance game. Some things, even basic. I don't know how to use MetaMask. Okay, well, learn it because it's a Web3 wallet is important in Web3. If you can't do that, you don't need to be investing in anything. Go back to grade school on Web3, right? You don't know the tools. Like you're at war and there's all these weapons that are all complex and you don't even know how they work. You're like, oh, so I got a lot of weapons. Turn one on. I can't do that. I can't use a Stinger. Well, if you can't use a Stinger missile, that helicopter is going to smoke your ass. You have to understand how to use the tools. So this is improving your decision-making processes means understanding the tools that you have. Then you can adjust your tools are used to elicit your ideas, your investment ideas, to actually do them, right? You have to express them somehow or you can't, get off zero. So this iterative process, it's like a feedback loop. It's a recursive feedback loop in game theory where players continually adapt their strategies based on outcomes. And there is an empowerment through taking responsibility. If you own up to your financial decisions, it's very empowering. And it shifts our mindset from one of being a passive player to active engagement, being a participant. And it makes us more attuned to the opportunities and also to the risks. And it lets us weight our positions accordingly so that we don't lose sleep and get pissed off and have emotional responses to things that are math-based. The price went down, therefore I am angry. That doesn't make any damn sense. The sense of empowerment that you would gain from taking responsibility, it is crucial for you to have long-term investment success. Sure, you can grab the dial and win the lottery thing or pick some 6 numbers. Luck is not a strategy. It's not teachable. You can't teach luck. Come on, kids. We're going to go out in the football field and learn luck. We're going to learn how to miss a ball, have it go over your head, run slightly the wrong route, cut too short, have the ball bounce off someone's pads who, let's face it, beat you to the ball, and then you catch it, turn the game around and win. We're going to go practice that. No, dude. Sometimes things go your way, but luck is not a strategy. So you have to build your own psychological safety nets. And that is your risk tolerance, your emotional resilience, and your informational discipline. Risk tolerance. Understand your own comfort level, right? What makes you lose sleep at night, right? With the risks that you are engaged in. Tailor your investment strategies, your weightings of positions, and the markets that you invest in according to your comfort zone. If you lose sleep, you're overinvested. Or maybe you're underinvested. Could be either way. Emotional resilience. Develop the emotional resilience to withstand the ups and downs of the market. Prevent knee-jerk reactions. Prevent FOMO. lulls, all this old bullshit. Stop. Right? You can't knee-jerk your reaction due to short-term fluctuations, because that basically throws all of your research away. And now I thought about this for 6 months, but now I've had one bad day in the market and one piece of news. I'm out. That's not good. And then information discipline. Practice informational discipline by critically evaluating news and data. Guard against an overreaction to sensationalized media, and also check sources. Go look at a few different articles. Like that article we looked at, Fetch. I would not make a decision based on that. It was a little bland, one might say. Go and do a little bit more research. And then if it informs an investment decision, fine, right? Based on your risk tolerance. So by completely taking responsibility for our financial investments is not just a financial strategy. It is a psychological strategy. It builds that psychological safety net, right? And it allows us to become resilient and empowered, but it requires an introspection, right? Quarterback amnesia, right? Don't be emotionally distraught by your losses, but learn lessons from them. Commit to continuous learning. Understand that you'll just never get it. None of us are ever going to get it. We're just in various stages of trying to get it. Some things are easier than others. None of us are ever going to get all of it. If anybody got all of it, they'd have all the money, and no one has all the money. So, embracing your successes and your failures, you're going to equip yourself with more of these psychological tools, not just for like your financial, future and prosperity and all that, but also for personal growth. Those of you that have been studying game theory, I bet, I don't know, because I can't guarantee anything, but I bet that your lives are better holistically, not even counting your investments. Just the idea that game theory and cognitive bias are floating around in there has probably made demonstrable changes to your life that have nothing to do with money, but indirectly do have something to do with money. That makes sense? So there you go. And then I would say, kind of to put a button on it, remember in the grand scheme of personal finance, the most successful players or investors, whatever, are the ones who own their decisions, right? You learn from the outcomes, you adapt your strategy, you constantly look for gaps in your game, but you own your decisions, the good ones and the bad ones. Eat the loss, eat the win, be honest about it, right? Don't go tell everyone you're the greatest receiver in the world if some shit bounced off of someone's pads that outran you and you score a touchdown. You were just at the right place at the wrong time for them, at the right time for. So we got to be honest. Like, don't go play roulette and tell everyone you're good at money. I'm a financial genius. What do you mean you played roulette? Yeah. With your life fortune. Yep. Well, that's a stupid decision. Yeah, but I won, so I'm smart. No, you won. So you won. That's it. Everything is its own moment in time. Anyway, take responsibility. Understand your risk tolerance. Create some emotional resilience, some informational discipline, and own it. Own it. That's all I have to say about that. All right. We'll see you tomorrow. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk sucking on meth grandmother wouldn't do, which you know is very little. And Brandon may or may not be wearing sleeves. None of us know. It's possible to know.
Do you trust your crypto assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.